Yeah. Hi, students. So, very good evening. The topic where we have concluded yesterday. So, we'll start from there. So, the yesterday topic is concluded with the definition. Definition of auditing we have explained. So, definition of auditing, if you recall, it's like it's an independent examination of financial information. Financial information is available in the financial statements. Financial statements refers to balance sheet, P&L account, and cash flow statement, notes to accounts, including statement of changes in equity, and including notes to accounts. So these are the financial statements auditor should examine. And if you look at the last sentence, auditor has to express an opinion on the financial statement. So to express an opinion on the financial statement, what kind of guidance we need to follow? So where the guidance is available, if you ask ourselves, then definitely we need to refer yesterday what I said. My audit is driven by standards on auditing which are issued by Institute of Chartered Accountants of India. So from the definition, the objective is to achieve, to express an opinion. To express an opinion, yes, I need a guidance. So that guidance is available in SA 200. So let's have a glance on SA 200 today. So there are few questions we have already seen from the students stating the fact that, sir, whether you are going to cover standards on auditing. See, without covering the standards on auditing, our syllabus will not be concluded. See, during the course of discussion, which standard which is required, so immediately that standard which will be taken. So it is like it's a combination of so the topic as well as the relevant essay which will be explained. So with this small introduction, let's look at the SA 200. So we all know that SA 200 talks about overall objectives of an independent auditor and conduct of an audit in accordance with the standards on auditing. In case so like screen share also I'm sharing today. So this is the summary of SA 200. If you take up the SA 200 standard from the institute material, there are so many paragraphs are there. So out of which, what are all which are having importance for the exam, not only for the exam level, to understand the entire standard SA 200. These are the focus. These are the paragraphs we need to focus more. So anyway, if the situation demands, again we'll come back to the this kind of summary sheet. Let's understand what it is now. So yes, if you look at the title of the SA 200, the title of the SA 200 is very clear that overall objectives of an independent auditor. So independent auditor, yesterday I have already explained, you are not having a direct or indirect interest with the entity because you are called as independent auditor. What is your overall objective? So to understand my overall objective, yes, I need to have the familiarity with the SA 200. So what SA 200 is going to talk about? Your objectives. So let's elaborate. So a small deviation before enter into the topic, just for connecting the purpose. What I'm talking here, even you are a student, correct? So you have an objective. To achieve that objective, you need to execute responsibilities. Suppose your responsibilities are not executed, you will not achieve the objective. So in a similar way, SCA 200 also dictates auditor's responsibility. You fulfill that responsibilities, definitely you will achieve the objective. Next question. Sir, what is my responsibilities? Who will define my responsibilities? You will define my responsibilities? No, no. My responsibilities are defined. So this is for that purpose only. So we need to go through the SCA 200. If you look at the SCA 200 first paragraph, the first paragraph is very clear that auditors responsibilities are defined by three components. One is statute, another one is official pronouncements of ICAI, the other one is audit engagement letter. See, during the discussion, yesterday discussion, I said that auditing is it's not it's not employment, it is engagement. I have mentioned the fact. So engagement means it's a contract between auditor and auditee. So before enter into any contract, you all know that Indian Contract Act 1872, it states that so contractor and contractee will agree certain terms and conditions. Suppose the certain terms and conditions which are not agreed, what happened? So your contract is not enforceable. So what are those terms and conditions you are going to include in your general contract? The same general condition, the same conditions here in between auditor and auditee should be included. What are the conditions to be included in the contract? For that purpose, yesterday I have given you SCA 210. SCA 210 talks about agreeing the terms of audit engagement letter. In that audit engagement letter, the terms and conditions which will be included. So what I'm doing now, I'm doing SCA 200, but in the meanwhile, SCA 210, so I need to discuss. Why I should discuss? I just now I told, to achieve my objectives in the title, overall objectives, to achieve my objective, what I have to do? I need to execute my responsibility. My responsibility, which are defined, where it is defined? It is defined in the engagement letter. It is defined by accounting standard, official pronouncements of ICAI. What are all called official pronouncements of ICAI? It can be a standard on auditing, it can be a accounting standard, all put together, which will be called as so official pronouncements of ICAI. So my responsibilities, which are defined by statute. Which statute you are talking about? Statute here we are considering Companies Act 2013. So if you look at the company audit one in your syllabus, company audit one, in that so topic we are going to discuss 139, 140, 141, 142, 143, 144, 145, but until 148, all these sections which are going to so define the responsibilities of an auditor. Those responsibilities auditor has to fulfill, then only you will achieve the objective. So overall objectives of an independent auditor is defined by statute, official pronouncements of ICAI, and audit engagement letter. In the process of understanding your overall objectives, so continue the further. So like SCA 200 not only taking the not only explaining the overall objectives, to execute these responsibilities as a auditing student, you need to understand few definitions which are given by standard on auditing. Those definitions, if you look at, so the first definition talks about audit evidence. Yes, as an auditing student, you need to understand what is audit evidence. I already mentioned the fact, the moment you are listening to the class, which will be interesting, but the moment when you are writing on the paper, you will not get anything. For that reason, so these definitions, because it is a descriptive type exam, how much you learned is not important, how much you wrote in the examination paper is very important. I think so people can have the importance. Let's look at the definitions. Audit evidence, simple terms here, so don't by heart any kind of definitions, apply common sense definitely. So that definition which we can understand. So what is audit evidence? Whatever the information which is used by the auditor to draw the conclusion, that information is called audit evidence. Simple, what I said, information used by the auditor. Sir, tons and loads of information which is there in the books of accounts. Am I taking all the information? No. I am taking only the information which is used for me. For what? For drawing the conclusion. I have not mentioned the fact, expression of opinion I have not mentioned here. I am talking about drawing the conclusion. Yesterday also have mentioned you the fact that conclusion is different, opinion is different. Opinion is expressed at the financial statement level. Conclusion is drawn on each ledger account level. So, how you will get conclusion on each ledger account? In that ledger, you select a few transactions. For the selected transactions, you will take the information. That information used by the auditor to draw conclusion on the ledger account, on the entire population. For 17 samples or 18 samples, whatever the information you have taken, that information is called as audit evidence. 100, see, in the purchase ledger account, 100 transactions are there, but I am not taking the evidence for 100 transactions now. If I do that, it will be an investigation. So my definition, which will go wrong, definition states that it is examination, not investigation. Correct? So you are doing examination. Examination means examining few transactions from each ledger. For those transactions, auditor collecting the information. That information is called as audit evidence. You all know that opinion is based on conclusion. Conclusion we will draw based on audit evidence. I said audit evidence. Audit evidence is the base for what? For conclusion. Conclusion is base for what? Opinion. So ultimately, auditor to draw a conclusion based on that opinion will be expressed. For that we need audit evidence. So with that I can conclude audit evidence. Now the question, sir, how much audit evidence auditor has to collect? This much or this much? How much? Is there any, like scale? Yes, there is a scale, but the scale, we don't have physical scale, but here the scale is satisfaction of the auditor. For that reason, it is mentioned the fact that sufficient audit evidence. What is sufficient? Can you say that it is sufficient? Yes. Suppose I am taking the food. Okay, I'll take 10 idlis. Correct? After that, my stomach is full. Correct? It is sufficient. Same strategy auditor will use when drawing conclusion. See, as long as I am obtaining the information, that information is enough to draw the conclusion. So the moment auditor feels that it is enough, that is called sufficient audit evidence. So sufficient audit evidence, it is the measure of satisfaction of the auditor. Hello friend, what is the satisfaction? Satisfaction differs from auditor to auditor, individual to individual. So for that reason we are talking about here opinion. Opinion is not a certificate. Opinion is only a judgment. So judgment means judgment. I will give one judgment, you will give one judgment, some other will give one judgment. So the judgment is based on audit evidence. It means that evidence which will vary from person to person, it is depending upon the perception of the individual. So what I said auditor has to obtain audit evidence. How much audit evidence auditor should obtain? Sufficient audit evidence. How do you feel that sufficiency? Sufficient audit evidence is talking about measurement. So it is what is the measurement here? Satisfaction of the auditor. See, satisfaction again differs. Suppose food is very tasty, I'll take more. Food is not tasty, I'll take less. In a similar way, here during the course of audit also we are having some taste. What is the taste? Taste will be there. Yes. What is the taste? There is a taste that suppose during the course of audit, if there are material misstatements are there, all fraudulent financial statements are given, means when there is a frauds are there in the financial statements, what happened? So auditor has obtained more evidence or less evidence. So whether I should obtain more evidence or less evidence, it is completely based on risk of the auditor. Suppose in the financial statement risk is more, I should obtain more evidence. In such a circumstances, more evidence is the sufficient evidence. Suppose the financial statements are not having material misstatement. In such circumstances, need not obtain more evidence. So you will go by less evidence. The less evidence is sufficient evidence in a case where financial statements are not having misstatement. So my dear friend, you need to understand the fact that audit is completely at the judgment of chartered accountant, judgment of auditor. So continue the definitions. I said, so audit evidence. I said sufficient audit evidence. Now, so when you feel that it is sufficient, so again sufficiency, so is defined in two terms, that is relevance and reliability. See, sufficient and appropriate. One, sufficiency talks about measurement, appropriateness talks about relevance and reliability. Take a small scenario so that you will understand what it is. You are examining the purchase ledger. You have selected so few samples from the ledger account. Now the client has to give relevant invoices relating to purchases, relevant invoices relating to transport documents. So if there is an invoice, see, invoice is annexed with the transportation documents. Then so goods outward entry. So when goods coming inside, goods inward entry, there's a goods outward entry will be, so purchase goods outward inward entry will be there. So all these documents, who has to produce? Client has to produce, auditor has to verify. During the course of verification, instead of giving purchase invoices, he has given a sale invoices. Means the data which is given by the client is relevant, not relevant, not relevant. So if it is not relevant, that audit evidence is not appropriate. So appropriateness talks about so relevance. What are the documents you are collecting, whatever the information you are obtaining, that should be relevant. See, not only the term relevance, relevant information should have reliability. See, relevant information should have reliability. So let's understand the same example. You have taken the invoice, you are examining the invoice, but in the invoice signature is not there, date is not there, GST and number is not there, GST so not mentioned in the invoice. Now you have taken relevant invoice only, but relevant invoice is having a reliable information? No. So my dear friend, whatever the information you are collecting for the purpose to draw the conclusion, that information should have relevance and reliability, and that relevant, reliable audit evidence should be sufficient. So then only auditor can draw the conclusion. So the conclusion is the base for expression of opinion. So I'm done with what is audit evidence, what is sufficiency, and what is appropriate. Sufficiency talks about quantity. So how much quantity? So I cannot judge. I said based on the risk assessment of the auditor. What I said, based on the risk assessment. If you feel that risk is more, you have to obtain more evidence. If you feel that risk is less, then auditor will obtain less audit evidence. That whatever the audit evidence you have taken, that should be relevant and reliable. Then going ahead, so another very, very important definition you need to understand is audit risk. Yes, my dear friend, ఆడిటర్ కి ఫీజు ఇస్తున్నాం కదా, ప్రశాంతంగా ఫీజు జోలో పెట్టేసుకొని హ్యాపీగా కాదు భయ్యా. సో డెఫినెట్ గా ఆడిటర్ కి రిస్క్ ఉంది. ఏం రిస్క్ ఉంటుంది? ఫైనాన్షియల్ స్టేట్మెంట్స్ లో మిస్స్టేట్మెంట్స్ ఉన్నాయి, కానీ ఆడిటర్ ఏం చెప్పాడంటే అబౌవ్ ఫైనాన్షియల్ స్టేట్మెంట్స్ ఆర్ రిఫ్లెక్టింగ్ టు వన్ ఫెయిర్ వ్యూ, సో క్లీన్ ఒపీనియన్ ఇచ్చేసాడు. అంటే హ్యావ్ యూ గివెన్ an appropriate opinion or inappropriate opinion? You have given inappropriate opinion, means you are facing the risk. That is the definition. So expression of inappropriate opinion when financial statements containing material misstatement. So what is this material misstatement? Every time we are talking about మెటీరియల్ మిస్టేట్మెంట్ అంటే ఫైనాన్షియల్ స్టేట్మెంట్లో తప్పులు ఉన్నాయి, మిస్టేక్స్ ఉన్నాయి, రాంగ్స్ ఉన్నాయి, ఫ్రాడ్స్ ఉన్నాయి, ఎర్రర్స్ ఉన్నాయి. కానీ ఆడిటర్ ఏం చెప్పాడు? అసలు ఎర్రర్ లేదు, అసలు ఫైనాన్షియల్ స్టేట్మెంట్ సూపర్ సో అని ఇచ్చాడు. నో 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 నో. The moment financial statement after completion of the audit, what I said, after completion of the audit, still financial statements are containing material misstatement. So you are facing the risk. So what is your ultimate achievement is here after completion of the audit? Once again I'm saying after completion of the audit, so ensure that financial statement should be free from, I have mentioned the word free from material misstatement. Financial statements lo elanti material misstatement lekunda undali, then only your opinion will be clean opinion. During the course of audit, if you feel that there are few material misstatements which will not come to the attention of the auditor, so you are having a doubt, in that case you should not give clean opinion, you should qualify that opinion. There are few circumstances where auditor unable to obtain audit evidence regarding inventory item. Physical verification I have not done. In that case, so have you taken appropriate audit evidence? Have you taken sufficient audit evidence? No. In such a scenario, you should not give clean opinion. So going ahead, what we are talking about, I have mentioned the fact what is audit evidence, then what is sufficient audit evidence, what is appropriate audit evidence. Now we are talking about audit risk. So what is audit risk? Again, recall the definition. So what is that? Expression of inappropriate opinion. What I said? Expression of inappropriate opinion when financial statements are containing material misstatement. So Mr. Auditor, please ensure that after completion of the audit, once audit is done, so you need to ensure the fact that financial statements are free from material misstatement. Okay, right? So going ahead, so then how the risk will come? How the risk will come? So what are the components of audit risk? So there are three components for audit risk. One is inherent risk, another one is control risk, another one is detection risk. Because of these three factors, financial statements included, what included? Misstatements are included. So the misstatement doors, how the misstatements will enter into the financial statements, what are the possible doors are three: inherent risk, control risk, detection risk. Let's understand inherent risk. I think we are going in a proper direction. Okay, so I am explaining overall objectives of an independent auditor and the conduct of an audit in accordance with the standards on auditing. The session will continue 1 hour. So on SCA 200, and so today I should also explain SCA 240 also. So with that, so nature of auditing will be concluded. The first topic will be concluded. So remaining small topics will be there in my shared material. So in case you have particular doubts, you can post me. Will definitely answer for those questions. So let's continue. Okay. So overall objectives of an independent auditor. So to achieve the overall objectives, I should execute the responsibilities. My responsibilities, which are defined by audit engagement letter, my responsibilities are defined by Companies Act, my responsibilities are defined by official pronouncements of ICAI. Suppose these responsibilities I have not executed, what happened? I will ended with audit risk. Suppose Companies Act said so you need to ensure that the financial statement should be prepared in accordance with the Schedule 3 Part 1 and Part 2 of Companies Act 2013. So management, whatever the financial statements which are prepared, okay. Again comments started. So use Telugu language, use English language. Sir, particularly chairman sir mentioned it. సో అప్పుడప్పుడు తెలుగు వాడమని చెప్పాడు. ఫర్ దాట్ రీజన్ సో ఐ స్టార్టెడ్ యూజింగ్ తెలుగు, అదర్వైజ్ సో ఐ విల్ నాట్ యూజ్ తెలుగు. ఓకే, fine. So it all, so I cannot satisfy everyone, so don't so put those kind of that kind of comments. So forget about the comment, come back. So we are talking about audit risk. Audit risk is what? Expression of inappropriate opinion. What is the possibility why you have expressed inappropriate opinion? Because you have not followed the standards in auditing. You have not followed the auditing standard. You have not followed the accounting standard. You have not followed the Companies Act section. You have not followed the audit engagement letter. What are all conditions you have included? Correct? The moment you are not followed those directions which are given by Companies Act, what happened, Mr. Friend? You will ended with risk only. So even after completion of the audit, your financial statement will contain material misstatement. So to escape, to reduce this audit risk to an acceptably low level, audit risk ni to an acceptably low level. How to reduce my audit risk to an acceptably low level? I should execute my responsibilities. I should complete my scope. My scope is defined by, so going back, so again, Companies Act law, what are all the rules and regulations are there, I should follow. Accounting standards I should consider. Auditing standards I should consider. In addition to that, because auditing is an employment, auditing is an engagement, is not an employment. Engagement is nothing but a contract. In that contract, what are all terms and conditions are there, those terms and conditions I should comply. Further, so risk ante enti? So when there is a misstatement in your financial statement, you will end it with the risk. So risk possibility, there are three possibilities: inherent risk, control risk, detection risk. Correct? Let's talk about what is inherent risk. Inherent, what is the word inherent? You all know that. Inherited. So it's like it started 1949 when Chartered Accountants Act was drafted, when 1956 Companies Act was drafted. From the beginning, these are all there. This cannot overcome. Inherent risk, there is a risk which cannot be avoided by the auditor. Sir, that kind of risk, suppose if you are not avoiding that risk, then every report is a inappropriate opinion. No, wait. Inherent risk is the risk that, look at, so there is a situation where management override the controls. When management is overriding the control, as an auditor, you are going there and you can stop the management. Hey, don't do it. No, management is having a right to overcome so their duties. But when the situation demands, yes, so this kind of things happen. So when this kind of once management they are doing it so beyond their power, there are certain exceptional circumstances they are going to do, but that exceptional circumstances only. So inherent risk is the risk which cannot be detected by the auditor. Why? Because audit has certain inherent limitations. If these inherent limitations are not there, then there is no inherent risk. What is your inherent limitation? The first inherent limitation is financial statements are itself having certain limitations. If you take an example of depreciation, what is the formula for depreciation? Cost of the asset plus all the expenses so incurred up to the asset put to use minus scrap value divided by estimated useful life of an asset. Yes, there itself we are having a limitation. What is the limitation there? So estimating the useful life. So suppose I purchase the bike, what is the estimated useful life of a bike? So I can say 3 years. but I gave it to my article assistant. He's roaring the bike. He's driving the bike in such a way like a lion is roaring. Correct? So in that case, 2 years only the estimated life. 1 year is only the estimated life. So here estimation of useful life of an asset, there is no measurement is here. Sometimes you ended with more depreciation, sometimes you ended with less depreciation. Suppose you said that asset useful life is only 3 years, but sometimes asset so can go for up to 5 years. So whatever the depreciation you debited in the P&L account, you created a less provision for a depreciation. It means that so by making a less depreciation, you are boosting up your profit. By the same time undervaluation, overvaluation of assets can be happened. So where estimations are there that cannot be avoided. So that is an example of inherent risk. Management intention, some management will say, sir, we will use the plant and machinery in a smarter way. We'll use the plant and machinery. So there are few management, so you all know usage which will be different from individual to individual. Correct? So inherent limitation is one of the inherent limitation is here. So what? Estimation. Where there is an estimation, there is a risk. That risk is called inherent risk, which cannot be stopped by the auditor, which will be situation to situation, which will be differ. Then the second one, control risk. What is control? You all know that every organization is having some controls. So attendance system is a control. So like uh, when you are entering into the main gate, so gate inward entry will be there is a control. What is an internal control? Let's have a small example how internal control which looks like. If you go to a factory or if you go to a manufacturing concern, internal control looks like this. Suppose a purchase manager wants to purchase the raw material. Can he buy directly without taking the permission from the higher official? No. He has to take the permission from the higher official. Is a control. So when purchase manager is raising the purchase order, first he has to cross verify. So why is the inventory is available in the store? Is the inventory, why it is not available? So go to the storeroom. Go to the once you go to the storeroom, there is a store manager. Store manager is responsible to issue as well as to receive the goods. So when you buy the goods, so he will prepare GRN. When you issue the goods, so like goods outward entry, which will be recorded by stores manager, is a control. So stores manager is the responsible person. So he will cross verify. Purchase manager will cross verify with the stores manager what happened to the stock which is purchased in the last month. So then he will say, so this goods which are used for this particular order, already goods are exhausted. We need to buy the material. So before purchase manager is making a PO, he has to have a concern. He has to have a consultation with the source manager. It's an internal control system. Store manager is also having an internal control system. We have already seen in the like a bin card system, which is already stated the fact in the costing. Bin card, you need to keep the stock in a particular place. So and you need to attach a card. So how much stock is coming, how much stock is going, every entry so is recorded in that bin card. It's a control for each stock. In a similar way, you have already you have seen that so like break even, like economic order quantity, EOQ is a control. So at one particular point of time, carrying cost and ordering cost should be minimized. So it's a control. Otherwise, what happened? Carrying cost will increase. Otherwise, ordering cost will increase. Is a control. So this EOQ system, which will be followed by management. So in the stores department, then purchase manager can raise the PO directly. No, So purchase manager is given an instruction. So before raising the PO, so raise the quotations. Why? What is the purpose of raising the quotation? Get minimum price. So in the market, you should bargain the price and get, so like so bargain price for that, so that there is no, there is no frauds will be there. Suppose this tenders and quotations are not there, what he will do? Purchase manager will purchase the stock from a related party. From the related party will get the commission. Correct? This possibility is there, is not there. For that purpose, management made an internal control system. Before raising any purchase order, please ensure that, so obtain tenders, obtain quotations, at least 2-3 vendors. From the 2-3 vendors, select the best quotation. So, and then against that quotation only, you need to raise the PO. This is an internal control system which is so included by management in the stores department. So why we are talking about this internal control? Because so I have to explain control risk. మళ్ళీ ఒకసారి బ్యాక్ వెళ్తున్నాను. ఏంటి బ్యాక్ వెళ్తున్నానంటే, సో ఆడిట్ రిస్క్ అనే డెఫినేషన్ చెప్తున్నా. ఆడిట్ రిస్క్ డెఫినేషన్ ఏం చెప్పింది? సో ఫైనాన్షియల్ స్టేట్మెంట్స్ లో మెటీరియల్ మిస్టేట్మెంట్స్ ఉన్నప్పుడు ఆడిటర్ కరెక్ట్ ఒపీనియన్ చెప్పకపోతే ఆడిటర్ ఎండెడ్ విత్ ఆడిట్ రిస్క్. దాన్ని ఏం చెప్పాము మనం ఇంగ్లీష్ లో? ఎక్స్ప్రెషన్ ఆఫ్ ఇన్అప్రాప్రియేట్ ఆడిట్ ఒపీనియన్ వెన్ ఫైనాన్షియల్ స్టేట్మెంట్స్ ఆర్ మెటీరియల్లీ మిస్టేటెడ్. సో ఇన్అప్రాప్రియేట్ ఆడిట్ ఒపీనియన్ ఎందుకు వచ్చింది? ఎందుకు? సో లైక్ ఈ మిస్టేట్మెంట్స్ ఎందుకు వచ్చాయి ఫైనాన్షియల్ స్టేట్మెంట్స్ లోకి? ఎలా వచ్చాయి అంటే, దెర్ ఆర్ 3 పాసిబిలిటీస్. వన్ ఈస్ inherent risk. I have already mentioned inherent risk is the so management, so sometimes what happen, they will override their function. That cannot be stopped by the auditor. So in an exceptional circumstances, as management can override the controls. In that case, there is a risk. That risk which cannot be avoided, which cannot, inherent risk cannot be eliminated. It will be there forever. Inherent. Okay, then we are talking about control risk. What is control risk? Control risk will arise when control system is failed in the organization. For that reason, for that control system is failed in the organization, who will make that control systems? Obviously, who is the chief of the company? Chief of the company is called board of directors. Board of directors organization chakkaga, so they have to run the business in a systematic manner. So how we can run business in a systematic manner? We can run the business in a systematic manner by keeping a proper controls in the organization. So continue the example, continue the illustration. So purchase order, so he will raise the quotations and then select the best quotation. Then so after that, so order will be given. Once the order will be given, supplier will supply the goods. Once the goods are supplied supplied to your location, so you will be directly dumped in the warehouse. No. First, once the goods reached your factory, there will be a gate inward entry will be there. Ekkadi nunchi vachinda vehicle. So what is the date? So what stock? So it is brought. So everything which will be documented, and then he will give gate pass. Yes. So further lorry can be moved to the stores department. But before reaching the stores department, one more control which will be included, that quality control system. There is a QC department will be there. That QC department, so they will take the samples from the lorry. So at least one bag or one box they will open. What in the PO, what quantity we have ordered, what grade we have ordered, and what is the price we have ordered. There are 3 questions we need to, so the department should audit. So but quality department they will do the audit, what grade, what quality we have ordered and what quality we have received. So they will do the match. After doing the match, so what happened? So that immediately QC clearance will be there. What will be there? QC clearance. Once the QC quality check department, yes, so lorry can go ahead. So further lorry will continue and it will reach the stores department. In the stores department, so the goods which will be, so dumped, not here and there. There will be a particular place which will be given in the store. So that particular place is called a bin. So bin system they are going to incorporate. It is also one of the control. Okay, once the goods are dumped, so in the bin, so immediately the stores manager will prepare GRN, goods received note. So why I am talking about all these things? Because so when you are examining purchase transaction, all this information you have to collect. So all this information is called audit evidence. For that reason, I'm explaining so step by step. Once the stores manager dumped the goods in the store, and he made an entry in the so bin card, and he already prepared goods received note. Hello friend, when you are preparing the goods received note, there will be a small audit will be there. What audit? In the invoice, how much quantity is billed in the lorry, how much quantity we have received. If it is not matching, immediately goods received note should be prepared for 100 goods or 90 goods. Actually, in the invoice, 100 goods are billed. But how many goods you have received? Only 90 goods you have received. So for that, in that case, for 90 goods only you have to prepare GRN. So 10 goods are missing. So when you are making the payment, immediately make a phone call and deduct that amount. So when you are making the payment of invoice, correct? So for that reason, there is a control when you are so preparing the GRN, goods received note. When so for what goods you have to prepare GRN? Only the goods which are received. For that reason, you just look into that invoice, look into that PO copy. So in the purchase order copy, so how much quantity you have ordered? The same quantity you have received now. If it is not received, for so company will be the loser. For that purpose, GRN has to be prepared by the source department. After that, so collection of all these documents. What are the documents? So just now I told. Suppose if it is a manufacturing company, so production manager so request the goods to the stores manager. I need this much quantity. So so you all know that in the costing also material requisition note like that. So you have come across. In case one more word will be there. So at a time, so the whole stock if you collect, so one note you will ask. Okay, anyway, so material requisition note is raised by the so production manager to the stores manager. Based on that MRN, so stores manager will issue the goods. The moment in the stores goods are not available, immediately stores manager will communicate the fact to the purchase manager. Purchase manager will, before making the PO, he will raise that all quotations and all. Then once the purchase manager, so like PO is raised, so immediately the goods which will be dispatched by the customer, so that's called vendor. So to our particular place, goods inward entry will be there, quality check will be there, goods received note will be there. After that, stores manager is going to communicate the fact to whom? To the finance manager or accounts manager, post the entry in the books of accounts. What entry will post? You all know that purchase account debit to so respective party, input tax, whatever. If GST is there, so you will consider all that entry will be posted. Correct. After that, what happened? Accounts manager will inform once the credit period is over. So he has given the 90 days credit or 60 days credit. So after that, he is going to inform to the finance manager, I need to clear the amount. So to the vendor. So please, after 60 days is over, he will raise the demand. Immediately, finance manager will issue the check. So there ends the matter. So look at here, payment, goods purchase, goods utilization, and goods quality check, all will be monitored, all will be regulated, all will be done in a systematic way. For that purpose, management has to design internal controls. The moment internal control is failed, so what happened? Misstatement will arise. When misstatement will arise because of failure of an internal control system, that risk is called control risk. Sometimes what happen? Control is failed because of operation. Control is failed because of design. So There are two possibilities. So control system can be failed. Number one, either by design or by operation. Sir, what is the operation? What is design? Yes, I am the stores manager. I have to prepare GRN. Already system is there in the organization. Once you receive the goods, you have to prepare GRN. But I have not prepared the GRN. So look at here, control is there, but it is not operated by the responsible official. In that case, what happened? So like controls are failed because of so not operated. So you will end it with control risk. The second possibility, control is failed by design. Yes, there are few circumstances. The design of internal control system is not effective. So, in other words, defectiveness is there in the design of internal control. Take a small example. So, why you should worry? So, look at go to the ATM. So, you all know that sometimes a girl is withdrawing the money from the ATM. There is a risk that so like behind one thief will be there, and so he will take the money from her. Correct? For that reason, all the banks, so RBI is given one circular. Every ATM should have one so guard, one like security guy should be there. It's a control. Correct? But what happened? So what these banks are doing? They are keeping a security guy. The guy is not having that much capacity to stop the thief. That fellow is having 40, that fellow is having 72 years of age. This fellow is having 32 years. Can he stop him? See here, control is there, but it is failed because of its design. So when RBI has to give the circular stating that Babu, you recruit that guy, the age for the guard should be so in between, so like 20 to 40, 30 to 40, that age should be included. But RBI has not mentioned the fact. So it means that control is there, is not there, is there, but design defectiveness is there. In a similar way, board of directors will design controls, but sometimes what happen that controls are design defectiveness is there. Small example. So this is a generic example now relating to our example. Sir, in a company don't want to make more salaries to the employees. For that reason, one fellow which is given two duties. Suppose I am a purchase manager as well as I am a store manager. In that case, what happened? I will issue the goods, I will not record it, and I will buy the goods. So what happened if if it is so requirement is there, is not there, I will buy the goods. So my dear friend, one fellow should not perform two duties. I'll give you one so like so practical example what I have faced. Stores manager and purchase manager will be the same. What happened? Purchase manager will raise the PO for 100 goods. Okay. But actually the goods received is only 80. But because one and the same now, he will prepare the GRN instead of 80, he will raise the GRN for 100 quantity. Because both are same now. So in that case, what about that 20 goods? 20 goods directly send it to his home. Correct now? So which can be there, cannot be there. Here now I am talking about so control is there, is not there, is there, but so giving two duties to one individual is a defective in the design system. So when there is a defective in the control, or if it is failed because of the operation of this so responsible official, control will not function. If the control is not function, auditor is going to face control risk. It means that during the course of audit, Auditor not only examining the financial statement, auditor should also evaluate the internal controls which are designed by management. For that purpose, the topic which is given, so the fourth topic in your material is internal control. So you need to understand internal control, and internal control should be evaluated. Even in our audit report, whether internal controls are functioning correctly or not, I should report. So when we are talking about audit report, so I'll highlight that paragraph. So this is the point. So like whether internal controls are effectively working or not, I should report that. That is also my responsibility. Then the third one, detection risk. So there are three components. One is inherent risk I have completed, control risk I have completed. Now detection risk. Detect. Who has to detect, man? Auditor has to detect. What he has to detect? Detect the material misstatement. So in the process of detection, auditor will use certain audit procedures. So what audit procedure auditor has to use? Suppose the audit procedures, if you are not using appropriate audit procedure, what happen? You will not detect the misstatement. Sir, auditor is a trained fellow, skilled fellow. Why he will use inappropriate audit procedure? I know that. How many article assistants are trained today? So they are going for a dummy articleship. So if you are going for a dummy articleship, you will select an appropriate audit procedure. That fellow will start chartered accountancy practice. So he doesn't know what audit procedure he has to use, what in particular context. So in a particular context, if you are not using, so if you use inappropriate audit procedure, you will not find a misstatement. Means your detection process is not correct. For that reason, you will end it with detection risk. Detection risk is sole responsibility of chartered accountant. Actually, inherent risk and control risk, because of these two possibilities, misstatements will enter into the financial statement. Misstatements financial statements lo ela vastayi ante because of management, because of employee. Employee will include the misstatement in the financial statement if there is no internal control system. When it comes to management, even if a strong internal control system is there, still management can include the fraud, because management is having a overriding control. I said, so provision for doubtful debts. Provision for doubtful debts. So we know that one debtor already insolvent, you need to make the provision, but management said no, there is a chance of recoverability, don't make the provision. So it is the management decision, it is overriding control. We all know that. So when a debt overdue more than 180 days, as per the Companies Act, you must make the provision. But these people will say that no, so he's a recoverable debt, so don't make the provision. This kind of overriding control will be there. So in such circumstances, you have to face inherent risk. Control risk you have to face due to control failure or defect in the design of internal control system. Then come to detection risk. Yes, detection risk, it is not the responsibility of management, it is the responsibility of the auditor. During the course of audit, detecting the material misstatement in the financial statement is the responsibility of the auditor. So for that purpose, so to detect that misstatement, auditor will use audit procedures. The selection of that audit procedures, if it is going wrong, you will not detect the misstatement. So sir, auditor already expert. Now just now I have mentioned the fact, auditor should have knowledge, should have training, should have experience. Without having all the three, don't start chartered accountancy practice. My dear friend, including me, in 2007 I have qualified. After that, so I have done my article, say after completion of IPCC, I have done my articleship, and then 5 years I worked in a big four company. Then only, so I am eligible to start up my auditing practice. Without, suppose you are qualified, the moment you are qualified, don't start your chartered accountancy practice, because you are having the knowledge but you are not having the training which will be done in the articleship. Array sir, I know how much you will be trained in the articleship. I trained when, see, after qualification. Yes, after qualification. So some training will be there after 2 3 years. After once you do at least 10 to 20 audits, once you will become an expert. So this kind of experience you should gain before. In that case, only you can reduce your detection risk. So suppose how detection risk will arise? Detection risk will arise because of selection of inappropriate audit procedures. If you select inappropriate audit procedure, you will not detect the misstatement. You will end it with detection risk. So with that I can conclude. So there are three risks: inherent, control, detection. All put together, what will come? Audit risk will come. Audit risk ki, what are the components of audit risk? So if there is a question, so the components of audit risk will arise in a three-way. So one is due to inherent limitation, due to inherent risk, due to control risk, and due to detection risk. So going forward, so just now I am talking about, when I am talking about risk. So I have highlighted the word misstatement. Sir, what is misstatement? What is misstatement? Misstatement, see, here I am not talking about non-sampling risk. Sampling risk, someone is asking. So non-sampling risk is completely different. Sampling risk is completely different. Okay. If the selection of samples goes wrong, so what happened? You will end it with sampling risk. So non-sampling risk. So what is non-sampling risk? So non-sampling risk, yeah. So if you select inappropriate audit procedure, lack of experience, lack of training, so instead of doing a substantive audit procedure, if you do the test of details, instead of doing a test of details, if you do the substantive audit procedures, that time what happened? You will not get sufficient appropriate audit evidence. In such circumstances, you will end it with the risk. Okay. So now you need to understand misstatement. What is a misstatement? Misstatement is something you have done wrong. Correct? What wrong you have done? So same, going back, accounts. So accounting is not done correctly. Recording is not done correctly. Valuation is not done correctly. And classification you are not done correctly. See, revenue expenditure should be included in the P&L account. Capital expenditure should be added to the cost of the asset. Instead of making this classification, revenue is capitalized and capitalized, so became revenue. Means you have done a classification mistake. So once you have done a classification mistake, what happened? So instead of revenue became capital. Means what happened? Classification became wrong. It's called misstatement. What has to be done? What is actually done? Having a difference. See, what is to be done? You need to enter the transaction as per the golden principles of accounting, as per the accounting standard requirement, as per the prudent commercial practices only. You need to record all the journal entries. Correct? Suppose you are not following prudent commercial practices, you are not following accounting standard, you are not classifying, so you are not following statutory requirements. What happened? There is a misstatement. So misstatement is nothing but what has to be done as per financial reporting framework, but what is actually done having a difference. నువ్వేం చేసావో, సో నువ్వేం చేయాలో యాజ్ పర్ ఫైనాన్షియల్ రిపోర్టింగ్ ఫ్రేమ్వర్క్ దానికి దీనికి డిఫరెన్స్ ఉంది అంటే దట్స్ కాల్డ్ డిఫరెన్స్, దట్స్ కాల్డ్ మిస్టేట్మెంట్. సో ఇఫ్ యూ లుక్ at now so instead of seeing my continuously seeing my face, just so I'm sharing the screen. So look at the screen now. SA 200 few paragraphs. Now the share screen share screen. Okay, now look at, this is the chart, this is the summary of SA 200. So there are few paragraphs we have already covered. So let's look at, I said, so now I'm reading the first part. This is the highlighting part. Overall objectives of independent auditor. Wherever A is there, so make it as auditor. Overall objectives of an independent auditor. To achieve the objectives, execute the responsibilities. Correct? Shanmuga, screen is coming. Overall objectives of independent auditor. To achieve the objectives, execute the responsibilities. Correct? ఏదైనా objective achieve చేయాలంటే ఏం చేయాలి? Responsibility execute చేయాలి. Who will define your responsibilities? Your responsibilities are defined by statute ante Companies Act, official pronouncements of ICAI. కనపడలేదా? ఒకసారి రా, వచ్చిందిగా, ఇదిగో వచ్చిందిగా. గో అహెడ్. ఐ థింక్ ఇట్ ఈస్ విజిబుల్. యా, అదే బాబు, ఇప్పుడు చూసి చెప్పు నాకు. సో statute, official pronouncements of ICAI. I said SCA 210. What is SCA 210? Audit engagement letter. So all these three components which defines the responsibilities, that responsibilities auditor has to execute. So if you execute, you will achieve the objective. This is the summary of first paragraph. Then what is the objective of the auditor? So what is the objective of the auditor? So objective of the auditor, share screen, cancel, share screen. Okay, ఇప్పుడు లేదా మరి ఇక్కడ చూపిస్తుంది షేర్. What happened here? Where is this? Shit. Your entire screen, huh? Now it's coming, no? Yeah. Okay, right. Sorry for the interruption. Okay, so this is the SA 200 summary chart. Overall objectives of an independent auditor. So to achieve the objectives, execute the responsibilities. Your responsibilities are defined by statute, official pronouncements of ICAI, and audit engagement letter. Then, so look at the next paragraph. What are the objectives of an auditor? So as per SCA 200, you have given some objectives. The objective is obtain reasonable assurance that financial statements are free from material misstatement. And after completion of the audit, what I said, after completion of the audit, you should state that financial statements lo material misstatements levu. The moment if you obtain that much assurance, you are achieved the objective. Once again, I am telling, obtain reasonable assurance that financial statements are free from material misstatement. The moment if you obtain reasonable assurance, then only you are ready to express an opinion. In any circumstances, if you are not able to obtain reasonable assurance, immediately you can either disclaim the opinion or withdraw from engagement. Such withdrawal is legally accepted. Once again, I am telling, auditor, during the course of audit, what is your objective? Your objective is so obtain reasonable assurance. So why reasonable assurance word is used? I already told, auditor is only testing few samples, not all the samples. Auditor collected the audit evidence only on the selected samples, not on the all samples. So you are taking only few information, not all information. The few information will give only reasonable assurance, but not absolute assurance. For that reason, here it is mentioned that obtain reasonable assurance. Suppose if you are doing investigation, then I will use the word there absolute assurance. So here SCA 200 is not so included the word absolute assurance. It is included the word only reasonable assurance. So you are the auditor. So after completion of the audit, you need to give what assurance? You need to give only reasonable assurance. To whom? Yesterday I have said to the economic user. Who are all economic users? Shareholder, management, then employee, worker, government, and then so like financial institutions. For all these people you have to give reasonable assurance. So reasonable assurance and what? అయ్యా నేను ఇచ్చిన ఫైనాన్షియల్ స్టేట్మెంట్స్ లో మెటీరియల్ మిస్టేట్మెంట్స్ లేవు. So then only I can express my opinion. So this is the objective of the auditor during the course of audit. Then this is the fact you need to communicate the same fact which will be given in the auditor's report. మళ్ళీ చెప్తున్నాను, the moment if you are not able to obtain reasonable assurance, you have to withdraw from the engagement or disclaim the opinion. I already told. So the moment you are in a position to express qualified opinion, you are able to give an opinion because evidence is there. Only in few circumstances evidence is not there, you can go for qualified opinion. Clean and qualified, everywhere clean and qualified will be given. So the moment where majority of the circumstances reasonable assurance cannot be obtained, there qualified opinion is not sufficient. In such a circumstances you have to go for a disclaimer opinion, or else sometimes you can withdraw from engagement. In the middle also you can drop the audit. So that is legally permitted by the standard and auditing. Standard and auditing said, in any case if I fail to obtain reasonable assurance, I can quit that engagement. So then we discussed about so definitions. There are few definitions I have already explained. So what is audit evidence, what is sufficient audit evidence, what is appropriate audit evidence, what is audit risk, and then so I have said what is a misstatement. So misstatement is nothing but what you have recorded actually, what has to be recorded as per financial reporting framework. If it is having a difference, the difference is called misstatement. Then so going forward, so another two important definitions are there, very important. So the two important definitions are, one is professional skepticism. What is that? Professional skepticism, one. Another one is professional judgment. So during the course of audit, auditor should have an attitude. That attitude is called professional skepticism. The moment you are not having this attitude, you will not detect the misstatement. So what is this attitude? So let's come back. Now we will discuss. So like for some time, and then again going back to the screen. Okay, right. So now we are talking about professional skepticism. What is skepticism? Skepticism is an attitude of the auditor. Everywhere ఎందుకు రావట్లేదు? లైవ్ వస్తుందిగా, వస్తుందా? Now it's coming. Yeah. So Yeah. Watching the screen. It's fine.
Yeah.
Right. So let's talk about professional skepticism. What is professional skepticism? Professional skepticism is nothing but auditor should have questioning mind, and it also includes being alert to the circumstances which might indicate the possibility of fraud. The third one, critical assessment of audit evidence. All these three put together is called professional skepticism. I am Mr. Chartered Accountant. During the course of audit, ఈ three qualities every auditor should have. ఏంట three qualities అంటే questioning mind. Why this questioning mind is required? You all know that in the process of gathering audit evidence, this audit evidence is correct or not correct, whether this audit evidence is having supporting document or not, whether this, so this is, that fellow is having an authority or not, whether whether it is approved it or not. So all these kind of questions you have to pose when you are examining the information, when you are examining the document. The moment you are not posing those questions, so in that case, lack of skepticism, which results risk. What is the risk? You are not able to detect the misstatement. So in other words, detection risk will arise because of lack of skepticism. So Mr. Auditor should have what quality? Skepticism. Skepticism is nothing but what? So questioning mind. Under the second part, being alert to the circumstances. What is the word being alert to the circumstances? So I will explain this topic in SCA 520 analytical procedures. But here I'll touch upon. So what is so being alert to the circumstances? The moment where, so you all know that sales number, you take the sales number, or you take the purchase number, or you take the data's number, or you take the data's number. See, when the sales increases, what is the possibility? Other way possibility. Either suppose you have made a credit sale, either data's amount should increase. Suppose you have done a cash sale, cash should increase. This is a simultaneous effect, correct? But here the fact sales is increased, but simultaneously the other account is not increasing, not decreasing. So in a same direction. It means what? So it is an unusual circumstances. See, in that circumstances, auditor should be alert, being alert to the circumstances which might indicate the possibility of fraud. Those circumstances are indicating. What is indication? If you look at that financials, if you look at that comparison, so because auditor has to apply analytical procedures, you need to apply your skill. Electricity bill is increased. What is the reason for increase in the electricity bill? Either department has to increase the rates, or consumption of electricity so increased, correct? When the consumption of electricity is increased, so look at the production has been increased or not? Production has not been increased, but electricity bill is increased. How it is possible? In these circumstances, auditor should be alert. The moment you are not having that alert, what happened? It leads to a fraud, it leads to a misstatement which cannot be detected. And another one, the third one, critical assessment of audit evidence. See, management has given information. The given information, management has given information. That given information having the completeness, having the relevance, having the reliability, and that information having the sufficiency. As an auditor, I need to judge. For that purpose, I need to, what are all documents I have collected, I need to do it critically assess. in terms of relevance, in terms of reliability, in terms of sufficiency. So that's what professional skepticism. Professional skepticism is an attitude of the auditor that includes questioning mind, being alert to the circumstances which might indicate the possibility of fraud, and critical assessment of audit evidence. This suppose this kind of attitude is not there, then what happen? So misstatements will not be detected. So what are the possible areas where auditor should exercise this professional skepticism? So the first area where contradiction of audit evidence. What is that? Contradiction of auditor. What is that? So you have taken information from the board of directors. Whatever the information you have taken from the board of directors, it is called internal audit evidence. Internal audit evidence for this audit, whether this information is correct or I have to take external consider 505 SA 505. If the SA 505 institute says that standard says wherever the possibility, auditor has to obtain third party confirmation. Now I have taken third party confirmation from the bank or someone. Okay. Whatever the information I have taken from the external source, that is external confirmation, matching with internal audit evidence. So both are not matching. So that is called contradiction of audit evidence. In that circumstances, auditor should exercise what attitude? What attitude? So professional skepticism. Correct? Then next. So possibilities indicating the fraud. There are conditions that are indicating the possibility of fraud. So what is the possibility of fraud? You all know that. So management making the provision for a depreciation, so more depreciation or less depreciation. If management intentionally, how you concluded, yes, management is so providing more depreciation. Yes, for that reason, auditors should have an idea on prudent commercial practices, how the other competitor is doing, how this entity is doing. This entity has to adopt the same practice which is so adopted by others. So industry standards should be followed, but this fellow to minimize or maximize their profits. So these people are doing what they are doing. They are either making more provision or less provision. So it is a management decision. Correct? So these circumstances are indicating the fraud. Why management is doing? So for example, so to boost up the more profit, what is the need of so boosting the profit? If you boost the profit, what happen? You will get so external source of finance. Correct? So in case inside any irregularities are there, that irregularities which can be so offset with the external source of funds. For that purpose, what the management will do, management will artificially they boost up the profit by doing this kind of misstatements. Correct? So in this case, wherever the possibilities are indicating the fraud, I'll give you the conditions are indicating the possibility of fraud. One practical example. Okay, you all know that every company set some standards for the employees. So in this year, you need to achieve this turnover. Like that, every marketing department, every financial guy. So for every department, there will be a target. Sometimes what happen, they will achieve to some extent, but so there is a difference. So so whatever the target is given, what actually performed, having a big difference. In that case, what they will do, management will do, all the people sit together and they will create artificial boost up. So take some example. Take some example. So what is yes, in a company expected turnover, targeted turnover is 100 lakhs, 1 crore. So board of directors has to achieve, or marketing team has to achieve. but actual turnover is 80 lakhs. What is the targeted turnover and actual turnover estimated? 20 lakhs difference. So in one company, what the marketing team has done, so let's look at, so like please understand here very carefully. Okay, in the April month, whatever the stock we are going to deliver, I'm talking about, for example, we are in the financial year 1920, 2021 April month, 2021 April month. So sales for those sales will get the orders in the month of March itself. Correct? In the March month, he will give the order. So our customer will give the order. In the month of April, we are going to deliver the goods. Correct? So what these people has done, in the month of March, whatever the orders which are given, those orders they are taking it as a sale, and they are so bridge the gap of that 20 lakhs. So against this advance order, it has done not in a small company, it has done in a big company. So as an auditor, how will you detect? Correct? Yes. Now in the month of March, they have included the 20 lakhs fictitious sale. Actually not happened, but they have posted an entry, only posted entry, but physically stock not yet moved from the goods from the store. So for that reason, I have asked, Arey, yes, you have sold the goods. The goods which will not directly move to the customer place automatically, na? There will be a transportation mechanism will be there, na? I asked, so produce transportation documents. Produce gate outward entry. Their transportation documents are not there. Gate outward entry is not there, but invoice is there. It is that conditions are indicating the possibility of fraud. There you need to apply skepticism. Because of my skepticism, I am able to do that. For that reason, during the course of audit, every auditor should exercise skepticism. Number one, contradiction of audit evidence, where audit evidence is not matching. Number two, conditions are indicating the possibility of fraud. The third one, questions on the reliability of documents. Yes, documents which are given by the board of directors, but so whether it is reliable or not, auditor having some questions. Yes, sometimes what happened, signature was not there on the document. So information brings into question the reliability of documents. Correct? Information brings into question the reliability. Why we are questioning the reliability? Because supporting information is not there. Supporting evidence is not there. Date is not there. See, like GST, like GST is not included. See, information brings into question the reliability. In such a circumstances, auditor has to apply professional skepticism. And there are few circumstances, normal audit procedures are not enough. I already told, if the auditor come across suspected circumstances, their auditing is not enough. You need to do investigation. The circumstances where auditor has to perform additional audit procedures. In such a circumstances, auditor has to apply professional skepticism. And then your professional skepticism, if you maintain professional skepticism, what risk we can avoid? Yes, so overlooking the unusual circumstances, or inappropriate audit assumptions, and then over generalizations which can be reduced with the help of your professional skepticism. To achieve the objective of an audit, every auditor must have professional skepticism. Once again, so I'm telling what is professional skepticism. It is a kind of attitude. It is a kind of attitude of the auditor. The attitude includes questioning mind, being alert to the circumstances which might indicate the possibility of fraud, and then the third one, critical assessment of audit evidence. Whatever the information you have taken, that information is having a relevance, having a reliability, having sufficiency. The three things auditor has to auditor has to assess. That critical assessment is called one of the quality of skepticism. Then the other definition, other important definition, professional judgment. The professional skepticism and the professional judgment which will help the auditor to achieve the objective of an audit. So, what is professional judgment? I already mentioned expression of opinion. Expression of opinion is nothing but it's a judgment. Opinion is a judgment based on the audit evidence collected by the auditor. Correct? So now the judgment, professional judgment. The word professional judgment. So a judgment which is given by a professional is called a professional judgment. Correct? When you will be called professional, so you will be called a professional. You should have knowledge. You should have training. You should have experience. So once you have training, once you have knowledge, once you have training, and once you have experience, definitely with the help of all the three, whatever the decisions you are taking, that decisions are called as professional judgment. So especially where the professional judgment auditor should exercise during the course of audit, professional judgment auditor should exercise in the following circumstances. Number one, materiality and audit risk. You all know that auditor has to examine all the transactions or few transactions. Auditor has to examine not all the transaction, few transaction. The few transaction should be the material transaction. Immaterial transaction should be the material transaction. Now the question, what is material? What is not material? In that, you need to use your knowledge, you need to use your training, you need to use your experience. So by using your knowledge, training, experience, you will conclude that this is material, this is not material. So to decide the materiality, what is required? Professional judgment. So in all circumstances during the course of audit, my audit is completely driven by materiality concept. My focus not on immaterial items, my focus only on material items only, because just now I have read one paragraph, auditor has to obtain only reasonable assurance. So reasonable assurance is a high level of assurance, but not absolute assurance. I said reasonable assurance is a high level of assurance, but not absolute. So for that reason, reasonable assurance, how you will get? Only by examining material transaction. By examination of material transaction, you will obtain reasonable assurance. So how to select that material transaction? For that reason, you need to use your professional judgment. The second circumstances where you will use professional judgment is selection of audit procedure. Yes. So when you are conducting the audit, how you will conduct the audit? So you will conduct the audit by application of audit procedure. There are two types of audit procedures are there. One is compliance audit procedure. Another one is substantive audit procedure. These two audit procedure I will explain in detail in the standard SCA 500. In the standard SCA 500. But here, suppose during the course of audit, whether I should use compliance audit procedure or substantive audit procedure. Again, in the substantive audit procedure, there are two audit procedures are there. One is test of details. Another one is analytical procedure. Where I should apply analytical procedure, where I should apply test of details. Suppose the circumstances where you need to apply test of details, but you have applied analytical procedure. The circumstances where you need to apply analytical procedure, you apply test of details. Means the selection of audit procedure is wrong. So why it is wrong? Because you are not trained, you are not having knowledge, you are not having experience. Suppose you are not having knowledge, you are not having training, you are not having experience, so your selection of audit procedure will go wrong. So, your professional judgment is useful in the following circumstances. Number one is assessing the materiality. What is material and what is not material? So, who will decide? You will decide based on your judgment. So, how you will come to a judgment? Because you are trained, you are knowledgeable, and you are experienced. And then the selection of audit procedure, at the time of selection of audit procedure, whether I should use test of details or I should use analytical procedure, so which is driven by judgment. And then especially I have taken audit evidence. The taken audit evidence is sufficient, is it appropriate, is it relevant? Is it reliable? How I am going to judge? Again, so my knowledge, my training, my experience will teach me, yes, the information is having sufficiency. That information is having reliability. That information is having relevance. So to judge the information is sufficient and appropriate, I will use my professional judgment. Correct? So the next where I will use my professional judgment. Yes, financial statements which are not prepared by auditor, which are prepared by board of directors. During the preparation of financial statements, board of directors will use some judgments. I said, who will prepare the financial statement? Financial statements which are prepared by board of directors. At the time of preparation of financial statement, board of directors will take some judgments. Those judgments are correct or not correct. Those judgments are appropriate or not appropriate. As an auditor, I need to judge. So it is nothing but judgment on judgment. Who has taken the judgment? Management has taken the judgment. Whether the management judgment is correct or not correct, I am judging. So by using my knowledge, by using my training, by using my experience, whether the management judgment is correct or not correct, I will evaluate. So give me one example. Yes. So especially where accounting estimates are there. Where accounting estimates are there, their management will use their judgment. Their judgment is appropriate, their judgment is reasonable, their judgment at par with accounting standard, at par with prudent commercial practices. I'm going to judge. That is called professional judgment. So professional judgment, where it is useful in the circumstances to identify the materiality, and to select the audit procedure, and then whether the collected audit evidence is sufficient and appropriate, and then whether management judgment in accordance with the financial reporting framework or not, I'm going to take a judgment. So, and then last but not the least, sir, you have taken audit evidence. Audit evidence is the base for conclusion. Conclusion is the base for opinion. Correct? Now the question, you want to express clean opinion. You want to express qualified opinion. In such circumstances, what are the conclusions I have drawn? How many ledger accounts are there? In the ledger accounts, what are all the conclusions I have drawn? In all circumstances, in all the ledger accounts, I am able to draw the conclusion. So the accumulation of conclusions which will help you to express an opinion. So at the time of expression of my opinion, again, I need to be trained. I need to have knowledge. I need to have experience and training. So this knowledge, training, and experience I will use in the context of audit. Then only I will take a informed decision. That informed decision is called professional judgment. So professional judgment which will be useful in the circumstances to identify the materiality audit risk, to establish the sufficiency and appropriateness of audit evidence, and to select an appropriate audit procedures, and management judgment is correct or not correct, to judge the management judgments. At last, for expression of opinion. So expression of opinion is based on audit evidence. So Audit evidence is the base for drawing the conclusion. So to draw the conclusion, to express, so my opinion, I should have knowledge, training, and experience. And then, so there is two more points left out in the SCA 200. So what is the two more points? See, when I am doing the audit, my audit is driven by materiality. So the materiality topic again having interlinked with SCA 320. SCA 200 is having an interrelationship with so many standards. SCA 200 stated the fact that auditor should conduct the audit by using the concept of materiality. Mr. Auditor, don't examine all the transaction. Examine only the material transaction. Now tell me, what is material? Material, when you will say it is material, it influences the any item, any account balance, any misstatement which could influence the economic user decision, which could influence the economic user decision. So that is called so material. Simple and in simple terms. In the management has done a fraud. Management has done a misstatement of 10,000 or 10,000 rupees. So like funds are misutilized by management. The 10,000 is going to influence the economic user? No. Auditor need to focus on that? No, not required. So my SCA 200 suggested me, during the course of audit, your concentration is only on material items. Now here one logic is there. Sir, if you examine only material transaction, you will detect only material misstatement. What about immaterial misstatement? Sometimes I will do the fraud of 20 rupees, 20 rupees, 20 rupees, 20 rupees, like in 1,000 transaction. Actually, it is an immaterial transaction, but accumulation of this immaterial, so which will become a material. Correct? Huh? In such a circumstances, those statements auditor will identify. Answer is no. This is called inherent risk. If you do the fraud in a systematic way, the fraud which is done by especially the senior management in a systematic manner, auditor, so during the course of audit, if you come across the suspected circumstances, only auditor will so put an extra effort. But management will do without come to the attention of the auditor. They will manage in such a way. They will do the fraud not in big amount. They will do the fraud in small amounts so that it will not come to the attention of the auditor. So it is an inherent limitation of an audit. But inherent limitation is not I cannot so like take shelter behind inherent limitations. So but I will try my level best. See, inherent limitations are there, but I will try my level best to examine. So there are few circumstances if the auditor unable to identify, then so because why he is unable to identify, because it is a immaterial item, auditor is ignored. Sometimes what happens that ignored immaterial misstatement also, which will have a risk. So that risk, so auditor cannot be addressed, because SCA 200 told that auditor should conduct audit with the help of materiality. So now can I draw the conclusion here? What is the conclusion? After completion of the audit, auditor will say that financial statements which are free from material misstatement, that assurance only auditor can give. So it means that still after completion of the audit also, financial statements are containing misstatement. Those misstatements are immaterial misstatement. Correct or not correct? The why, see, the reason is here SCA 200 is guided me. Hello auditor, you do the audit with the help of concept of materiality. Means I should auditor always go by so big amounts and so high amounts. Correct? By examination of this big amounts and big transaction, you will detect only material misstatement. You will not identify the immaterial misstatement. So going back to the overall objective of an auditor, their auditor has to obtain reasonable assurance that financial statement should be free from material misstatement. That is the objective of an audit. See, my objective of an audit is only to identify the material misstatement. Material misstatement is what? Because why I am concentrating only on material misstatement? Because my standard told use concept of materiality. You should obtain absolute assurance kadu. You should obtain only reasonable assurance. Sir, reasonable assurance is a high level of assurance. Please understand the fact. Anna, audit లో ఆల్మోస్ట్ పెద్ద 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 ట్రాన్సాక్షన్స్ అన్ని ఆడిటర్ ఎగ్జామిన్ చేస్తాడు, వాటన్నిటికీ ఎవిడెన్స్ వస్తుంది. ఇట్స్ ఎనఫ్ నా టు ఎక్స్ప్రెస్ అన్ ఒపీనియన్. ఎనీవే మై స్టాండర్డ్ టోల్డ్, అయ్యా ఆడిటర్, even after completion of the audit, still there are some misstatements which cannot be detected. That cannot be detected misstatement should be immaterial. Suppose in the after completion of the audit in the financial statement, so you left out some material misstatement, so you will face audit risk. You have given inappropriate audit opinion. So this is another important point you need to understand. So auditor has to conduct the audit with the help of concept of materiality. By using this concept of materiality, you are examining only material transaction. Because of material transaction, you will obtain reasonable assurance. So you will obtain reasonable assurance, and so you will give an assurance that financial statements which are free from material misstatement. But there are few circumstances, even after completion of the audit, there are few misstatements which are still there in the financials. Those misstatements are immaterial. Then so another important point you need to understand in SCA 200 is, sir, auditor is knowledgeable, sir. Auditor is trained, sir. Auditor is experienced, sir. Okay, no problem. But still, there are few things audit cannot be achieved, because my audit is having some inherent limitations. Inherited, because when I came out by birth, my subject is having some inherent limitations. What are those inherent limitations? Number one, examination is nothing but one inherent limitation. So auditor do investigation. When I do investigation, then I will detect all the misstatements, na? But audit will permit to do investigation? No. If you do investigation, my topic is completely deviated. My definition says only examination. Correct? So if you do examination, suppose in the 100 transactions, you selected only 20 transactions randomly. For the 20 transactions you have taken evidence, all the 20 transactions correctly recorded, accurately recorded. It means that remaining 80, you will feel that everything is correct. Sample selection, that only stating the fact. But what happened in there are circumstances in the 80 transactions, 80 immaterial transaction, there is a possibility some misstatements which will be left out. That cannot be detected by the auditor. It is inherent limitation of an audit. This is what nature of audit procedures. Whatever the audit procedure I have applied, so what are all audit procedures I have selected on only selected samples, not all the samples. For that reason, there are few misstatements which cannot be detected. Right? So immediate. Next, number 2, the second inherent limitation is, suppose a fraud which is done by employee, which can be detected. Why? Because control fails. Control fails audit during the course of audit. In the process of evaluation of control system, where are the control failures are there, so automatically I will identify the control risk. Correct? So employee fraud which can be detected by the auditor by application of audit procedure. Correct? But there is a fraud which cannot be detected by the auditor. Whose fraud? Management fraud. Management has done a fraud. They have done a fraud in a systematic way. It's a planned, perpetual error. It's continuously done by management repeatedly. It looks like a practice. In such circumstances, that senior management fraud, because of collusion, that senior management fraud, so which is not coming to the attention of the auditor. Yes, take an example of Satyam case, Satyam scandal. What happened? So all the board of directors are colluded, and including financial institutions. For example, in the bank, so in their balance sheet, fixed deposits are there. For the fixed deposit, as an auditor, so as a like skepticism, as a professional judgment, what I will do? Fixed deposit is there in the balance sheet. Produce the evidence. I will ask. Correct? So what is that? So fixed deposits. So I'll ask that term deposit certificate, which is given by the particular financial institute. They have given. I have examined. Stamp is there. Signature is there. Everything is there. Correct? It means that my job is over by taking the document, Xerox document. But what happened? That document is not given by the financial. It is a fake document, which is prepared outside and stamped. Everything which is done by banker. So it means that so by with that fake whether it is a fake document or original document, that much skill auditor is not having by because auditor is not an investigator. Auditor is only the examiner. Suppose a document lo signature lekapothe auditor doubt vastadi. Signature undi, stamp undi, SBI, so State Bank of India seal is everything is there in that. So you will have a doubt. You don't have a doubt. You don't have a doubt. But it is a fake document. It is done by management by colluding. So in other words, senior management people has done any fraud. Board of directors has done any fraud that which never come to the attention of the auditor. It is done in a planned way. So sometimes those frauds which cannot be detected by the auditor, even by application of skepticism, even by application of your knowledge, by training and experience. And then the other inherent limitation is for the audit. Auditor has to conduct the audit in a reasonable time and reasonable cost. See, where accounting ends, auditing has to start. In India, 31st March financial 31st March, so accounting comes to an end. No one will give financial statements to the auditor. For your kind information, if you ask them, sir, chana advance gunnare sare, ala comments good vastayi. Correct? When they will give in the month of May or June or something like, you all know that every company has to conduct the annual general meeting within 6 months from the end of the financial year. 6 months they are having a cushion time. Suppose if you go in advance, financial statements are not ready. If the financial statements are not ready, you cannot go and do the audit because examination of financial information is not available now. So it's a time constraint is there. Even though time constraint is there, but auditor will not go by so less persuasive audit evidence. Time unna lekapoyina, time ni base cheskoni నాకు time లేదు, I have not taken audit evidence, like that you cannot take it granted. Even though you have an inherent limitation of time, but still you need to obtain reasonable assurance. For that reason only, during the busy season, I request every article assistant, so don't work 8 hours, do 18 hours work in a day. Why? Because every auditor is facing this kind of problem, that is time is the constraint as well as the cost. What is the cost constraint? Yes, sir, if I have taken 1 lakh audit fee, I have to perform more audit procedure, more evidence. I am taking 10,000 audit fee. Sir, whether you take it 10,000 or 1 lakh, you need to apply appropriate audit procedure. You need to apply. So you have to obtain reasonable assurance. So cost and time, even though it is an inherent limitation, but don't take it as a granted. So you need to maximize. So to the best, to the maximum. So you need to overcome this inherent limitation as time and cost. And then financial reporting itself is the inherent limitation I have already mentioned. See, whatever the financial statements which are given by board of directors itself having inherent limitations. In simple words, wherever estimates are there, wherever estimates are there, what is estimate? So look at the definition of accounting: estimate, approximation of monetary amount where there is a absence of precise means of measurement. ఎక్కడైతే so you cannot able to measure, their auditor will go by so approximation. See, I have not only mentioned the depreciation definition, provision for doubtful debts, provision for a tax. See, now I'm asking, whatever the provision you made exactly which is matching with the actual tax liability? No. So if you made an excess provision, it's an extra burden on the profit and loss account. You made a less provision, so it is an artificial boost so to the profit and loss account. Correct? So which can be stopped, cannot be stopped because it's an estimation. So where estimates are there, so our financial reporting itself, our balance sheet, our P&L account itself has some limitations. So because of the reason, auditor, so auditor will provide only reasonable assurance but not absolute assurance. So why I'm giving reasonable assurance? Because I'm facing the limitations like financial reporting. Your financial reporting itself is a limitation. And the second one, audit procedure. I'm applying my audit procedure not on all items, only on the selected items. So sometimes what happened, so the population which is not selected, in that there might be an error, that error which cannot come to my attention. So that is so nature of audit procedure. And then the other inherent limitation is cost and the time. The other one is so senior management fraud. I've already told there are senior management frauds which cannot be detected by the auditor. And then the other biggest inherent limitation is related party transaction. For that reason, so to avoid this inherent limitations to the maximum, so particular standard is given. So SCA 550. SCA 550 talks about related party transaction. Mr. Chartered Accountant, in this area, there is a possibility of inherent limitation. So to overcome that or to reduce this risk to an acceptably low level, please follow my guidance, SCA 550. So what is related party transaction? In the related party transaction, this company will transfer the money to the sister concern or 100% subsidiary company. So why you are doing, what is the purpose you are doing? Sometimes you will not get answers. So because of the related party, so relationships. So whether this related party transaction they are doing for a genuine purpose or for other purpose, sometimes you are not able to understand. And then another limitation, I am not running the business. Who is running the business? Management is running the business. So management will go for an expansion, management will go for a diversification. Sometimes, so these funds they are going to transfer to other new venture. But other new venture is a profitable or not profitable, as an auditor I cannot judge. Future events or future circumstances which cannot be judged by the auditor. So by considering all this lump sum, so auditor can give only reasonable assurance but not absolute assurance regarding the financial statements which are free from material misstatement. So I have only 8 minutes time. So just look at the, so again screen share I am going. Shanmuga is visible. So look at here. Yeah. So look at this paragraph, an audit of financial statement. Audit of financial statement does not relieve the management responsibilities. So auditor's opinion does not assure the future viability. Why? Because so my subject is having certain inherent limitations, and auditor's opinion does not help in management measuring the efficiency and effectiveness. So why these all the three I am not able to assure, because auditor is conducting the audit based on the concept of material. I am only examining only material transaction, not on all transactions. And then so every auditor should conduct the audit with some ethical values. So That paragraph I have not included. So every auditor has to do the audit with some ethical values. The ethical values which are included in the code of conduct. What are those ethical values? Don't worry. Again, I'm going to explain in the concept of auditor's independence. So, these ethical values are going to protect the independence of the auditor. Where auditor is having more independence, he is going to protect the public interest. In simple terms, suppose the auditor is having ethical values. Because of that ethical values, your independence will be protected. As long as you are independent, definitely you will protect the public interest. Suppose you are not having ethical values, you will not be independent. If you are not independent, so you will not assure management, you will not assure shareholder, you will not assure government, you will not assure financial institution, you will not assure management. So these people will not be given assurance. So మనం assurance ఇవ్వాలి అంటే first auditor should have ethical values. What are those ethical values? Ethical values is nothing but integrity, objectivity, professional competence and due care. So confidentiality. What is that? Integrity, professional competence and due care. So professional behavior, confidentiality, all put together is called ethical values. So with the help of ethical values, auditor will become independent. Correct? So once you are an independent, so you can protect the public interest. Then when you are doing the audit, you should have professional skepticism. PS stands for professional skepticism. PJ stands for professional judgment. What is PS? Questioning mind, being alert, and critical assessment of audit evidence. So where you should apply this professional skepticism? Contradiction of audit evidence, information brings into question the reliability of documents, conditions are indicating the possibility of fraud, need of additional audit procedures to perform. So this professional skepticism is going to reduce the risk. What risk? Overlooking the unusual circumstances, overgeneralization, and inappropriate audit procedure. This risk we can reduce with the help of professional skepticism. Then, so what is professional judgment? How professional judgment will come? Professional judgment will come through knowledge, training, and experience. This professional judgment we will use especially in the area of materiality, audit risk, and then design of audit procedure, and then evaluate the audit evidence in terms of sufficiency and appropriateness. Then management judgments are correct or not correct, whether they have done in FRFW or not. FRFW is nothing but financial reporting framework. And then at last, to draw the conclusion based on audit evidence. Okay. And then last, inherent limitations of an audit. What are the inherent limitations? Why auditor will give only, he will give only on material misstatement, not on all misstatement. And then auditor will give only reasonable assurance. Why he will not give absolute assurance? So because my subject is having some certain limitations. Those limitations are my financial statement itself, nature of financial reporting, and then nature of audit procedure. Then whatever the audit procedure I'm using, what are the financial statements they have given, so itself having certain limitations. Then I need to do the audit in a reasonable time, in a reasonable cost, especially the fraud done by senior management, which will not come to the attention of the auditor because it is systematically planned in a smaller amount. Then related party transaction, SA 550, and then sometimes non-compliance of loss also auditor cannot be able to identify. And then future events are certain conditions which cannot be predicted because auditor is not a scientist. What is going to be happen, he cannot predict. So future events or conditions auditor cannot predict. So these are the inherent limitations. Because of these inherent limitations, auditor cannot give absolute assurance. Auditor will give only reasonable assurance. Coming back to the last, so what is your objective? Your objective is obtain reasonable assurance about financial statements which are free from material misstatement. This is your objective. So you should only detect material misstatement. You will not detect all misstatement because of inherent limitation. You will give only reasonable assurance but not absolute assurance because of inherent limitation. So especially this 250 non-compliance of loss. You already, sir. So why auditor unable to identify the non-compliance of loss? Yeah, non-compliance of loss is not nothing but, so I am able to identify PF compliance, ESA compliance, so tax compliances and FEMA compliance. These compliances I can sometimes I can detect, but there are other compliances will be there with relating to non-financial information. So what is that other non-compliance is nothing but, for example, they are running the business without so fire extinguish equipment. In that area, generally auditor, so it is non-financial information. So in that case, auditor especially, so the compliances relating to non-financial information, generally auditor is poor in that area. So in that area, auditor not able to identify the non-compliances. So this is a summary of SCA 200. I hope you have enjoyed the class. So in case you have specific doubts, definitely, so you can post it. I will address so now and then. In case anything not explained, so you can again put a comment. So definitely I'll address. So thank you. So who are participated in the so like webinar, so, this like live channel. And then tomorrow my concentration is on secondary objective of an audit. In other words, I'm going to teach SCA 240. Thank you. Good night.